The goal of any watch list and weekly watch list, daily watch list, monthly watch list is what are, number one, the time frames we're focusing on, and what are the relative outperformers that have the highest probability of follow through. And that ultimately is what our focus list, our watch list, what it is we're going to trade should be made up of. What we trade is more important than how we trade it. And that's absolutely the mantra in the Sector Secrets Mastery. For those of you that don't know me, I'm Raghi Horner, and we're going to go through my weekly watch list process and some of the open trades that we have right now. On the left side of the screen, you can see I'm recording this at 12 noon East Coast time. A couple things. My only current open trade is gold. And every day in the Sector Secrets Mastery, I send out the trade alert recap. So what's going to go out today, Monday, is the trade alert recap for Monday, our open trades. And what we have here, and I'm going to change this while we're doing this, because this is something I send to Sector Secrets Mastery every day. We have a saying, every entry, every exit, every day. So if I have scaled in 2 or 3 times into a position, every single entry is going to be listed here. If I've scaled out up to 3 times, which is always my goal, every single scale out is going to be mentioned here. So the only trade that we have open as of Monday morning, had open, was our gold trade, where I was watching GC as the setup for long calls in GLD. Now, we bought the 14 Feb or the 21 Feb. I gave traders a choice as to which they would like, depending on the amount of budget they could dedicate to this trade without exceeding a certain amount of risk to the account. Gang, I'm going to tell you right now, what's very common is somewhere between about a 3 to 5% risk to the account per trade, right? 5 is the upper end. Here's what I commonly see happen when traders put on a trade and they're wrong and they've added who knows how many times to a loser. Oftentimes they're going to have a drawdown in their account of 10%. I cannot begin to tell you what a terrible idea that is, because on those isolated events that adding is finally stopped out, because we all play with depreciating assets when we're options traders, and we can run out of time, right, before we have a chance to win the game, right? You ever hear that saying? We didn't lose, we ran out of time. That's kind of one of the things option traders are always against. That's a knock against adding to losers, right? Now you might say, Rog, what's the difference between adding and scaling in? Knowing beforehand what the levels are and being able to pick and choose which levels you want to scale in at and how many predetermined dollars, predetermined risk are you willing to take on. Adding doesn't allow traders to do that. So don't do it, right? Okay. So GLD is a position we bought for $4.16. These are the $2.52 strike calls. Now, if you've got still 11 days to expiration, and at this point, this strike is 11 points in the money, how do we position size in such a way that we can scale out up to 3 times? Well, I would like to start off, and I like to trade an even number of pairs, right? Even number. So if I'm going to buy 252 calls, at minimum, I'd like to trade 2, if not 2, 4, 6, 8. And that's the way I like to trade it. Now, if you can only budget for maybe 2 or 3, that's fine, because you could scale out once at T1, once at T2, and eventually scale out at T3, which is either going to be the tightened or trailing stop, or typically time. So I'm running out of time, especially for the February 14s, and I've only got 11 days for the February 21s. Those 252s right now are trading at $15.66. So we bought something for $4 and change, and now they're trading at $1,566. Having multiple scale outs by having a plan to scale in with at least, say, 2 to 4 contracts at the beginning of the trade is so important. And that also means when we are budgeting for trades, we got to think about how many dollars can we spend, what's the maximum amount of risk to the account, right? And therefore, that helps us determine our position size. It's not small, medium, large, gang. We're not ordering fries from McDonald's. What it is what is the specific number of dollars worth of contracts we're allowed to buy. And that's all process driven. And I'm diving into this because as we go through this year of CHOP, it's going to be imperative to look at trends. And as we go through this year of high volatility, risk management, as it always is, but most definitely this year, has got to be the number one focus. All right, the other trip that we just took today was financials. Now, you'll notice here on the notes, we have 2 days of Powell testimony, the old Humphrey Hawkins testimony, where he's going to speak to the House and the Senate and get grilled by questions. This is very reminiscent of an FOMC press conference. And what's going to happen is we're going to have volatility starting at 10 a.m. tomorrow. Now, I've built an XLF position here, and this is part of the watch list process, gang. I'm going to show you some examples of what we do in the Sector Secrets Mastery to find the best, most high probability setups. If we're looking at XLI, right? We were looking at this in the Mastery today. These are the 3 names that are going to pop up at the top of the list. That's where the probability is highest. And by the way, on Wednesday at 2 p.m., we're going to be doing a webinar. This is going to be the second webinar I'm going to be doing for the upcoming immersion in the Sector Secrets Mastery. So if you checked out the first one, this is not the same slide deck. It is not the same examples. And I'm going to be diving into a lot of the questions that folks had for me, like, Rog, what's your expiration? Do you trade S&P? What are the ways we can trade S&P, right? What is this index sector stock thing? We're going to be getting into brand new examples in all that. Now, here's an example of index sector stock. Financials are in an uptrend. Berkshire Hathaway, uptrend. JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Goldman, and Morgan. The only one that I would avoid right now, not that it's a bad name, but it's lower probability, is American Express, right? The easy no's are anything with red candles, right? So just cross those out. Trade this, not that. Make it a process of elimination. If we have at least 5 green candles in a row, it's at least on the list, but I would consider this kind of second tier versus top tier, where we've got a trend in consistent green candles. Because there are so many green candles, right, and uptrends in the top part of this list, right, I'm going to go with what I call the tide. When so many individual boats are strong, go with the tide, right? Because the XLF is going to take advantage of the high concentration weighted names, which are Berkshire Hathaway and JP Morgan and Visa, etc. And so this allows you to take advantage of the move without a binary, let's hope that Citi bounces, or Bank of America, or American Express, or JP Morgan, whatever it is. So we take a little bit broader a view. And so XLF is the other open position. Now, I like Bank of America a lot. These are the notes that I share with the Mastery folks for our swing trading setups. And Bank of America and XLF are both on the list. We've scaled in once at 51.35, so we don't back the truck up. And now we're scaling in again here at 51.22. All right, so as this thing sinks, as this is moving lower, bearish momentum, what I'm doing is scooping up these calls. By the way, if I'm wrong, I have a predetermined amount of risk to my account. I have a predetermined amount of risk to each option. And so the second scale in is going to allow me to buy the 51. This is happening right now. The second scale in is going to allow me to buy the 51 strike for about $1.30. Am I going to get the fill? So now what I'm going to do here is I got in a fill at a 135. That's already what I got filled in at. So I'm asking myself, is it worth it to scale it at $1.30, or can I be patient, right? And you're going to notice there's only a 5-cent difference as we've gone in. So I might wait to see if we sink a little bit more. Otherwise, I can go ahead and spend $1.30 per option and scale in once again. So these little nuances that we can focus on. And the whole idea here is to take advantage of the overall uptrend on the daily time frame and buy as the candle sinks into the green zone. So that's the, if you're looking for an automated way to say, Rog, what's in an uptrend that you're focusing on? Check. What is in the zone of potential entry, right? Check. The question I often get is, Rog, but what about tech? All right, let's go do that. Let's go open up the QQQ and take a look at a lot of the names that folks are maybe disproportionately, maybe not so accurately focusing in on. Don't worry about what's popular, gang. I'm pretty sure not many people are looking at gold and gold miners right now, and yet this has been a multi-day, now almost 4 times return of premium paid, with 25% risk on premium paid. So we were risking just over $1 for each $4 option, $4.16 option, and now these are almost $16. Make sure the risk reward favors your account growth goals, right? Risking more than you could make, bad idea. Unrealized risk of 100% on the way to maybe scaling out at 20 or 30% does not scale to account growth. Take a look at the mess that kind of is tech. And it's not a great looking group of names. There's a couple names that look really good. I'd say Meta would be a standout, right? So for those of you saying, hey, Rog, when's the next opportunity on Meta, right? And does it have to be these names? We know that Netflix has been a pretty good outperformer in the XLC, which is where Meta hangs out. Take a look at every single time the green candle hits this upper edge of the gray zone. That's what we're looking for. We're looking for these candles to get in that gray zone every single day, right? So that's what we're looking for once again on Meta. That would happen at about 705.5. We know Netflix has been something, actually, if you've been in the Mastery and in the Simpler Central room, I believe on Tuesday, just this last Tuesday or Thursday, folks asked, Rog, what about Netflix? Same thing. As long as we have 5 candles in a row, that happened here. This is still not an uptrend, but look at how the top tier candles tell me I want to be a buyer of calls. So all I do is just going to trace out this daily price movement range level, right? And if the candle hits the zone, buy at or slightly in the money calls. That's it. Don't buy them on the way up. Don't buy them up in here. Don't buy them up in here. Don't buy them up in here, right? Notice how many times we pull back to support and given us an opportunity to scoop up those calls a whole lot less expensive. Automate your zone so you can remove the subjectivity and the emotion, and it makes it a whole lot easier to scan any list of stocks and say, hey, what's the color of the candle? What's the structure of the market? And then where's my zone for entry? That's it. And then you can go about doing some of the, as I talked about earlier, the risk and the risk to the account and risk per contract work. That's what we're doing here, gang, right now. I showed you financials. Let me show you one other group that I'm really interested in, and that's going to be gold miners. Now, while you're looking at gold miners, one of the things that we're also going to be looking at in the Mastery is metals and mining, as well as basic materials. So keep an eye on XME and keep an eye on XLB. But gold miners are moving pretty nicely with the gold strength. So once again, what are the relative outperformers? Gosh, I mean, this whole list looks phenomenal. Go with the tide, you bet. If there's a pullback in GDX, do it. Newmont Mining, I'd put on the list. GOLD looks pretty darn good. So what we want to do is focus on where is there open interest, where is there high concentration weighting, and in this case, I would just go for it with GDX or maybe Newmont Mining, which is the highest weighted stock within GDX and will move the most like, for the most part, except for around earnings, it will move the most like GDX. So this is, again, what are we trading? Trend, strength. What are we focused on? Relative outperformance. What are we waiting for? Dips. Newmont Mining is just over 12% of the weighting within the GDX stock. All right, AEM's about 12% as well. Wheaton, WPM's about another 7. These are both coming in at about 7%. This is about 12%. So focus on those high concentration weighted names. Focus on the trends, and I'll see y'all in the next update.